Wall Street and lower, even amid tariff uncertainty. Dow sheds 155 points, while the S&P 500 and the Nasdaq end marginally in the red. Stocks in Asia Pacific also open lower as investors await China GDP and sales data. The Nifty is indicating a lower start for the Indian market. Oil prices remain steady as investors digest the latest on the U.S. President Donald Trump's tariff orders. Gold prices rise to a record high, helped by safe haven demand and a weaker dollar. Inflation cools off to its lowest levels in nearly 6 years. A consumer price index in March eases to 3.34%. Food prices drop to a 40-month low of 2.7%. In key earnings, Wipro is set to report Q4 numbers today. A CNBC TV 18 poll suggests dollar revenue will decline 0.5% on a sequential basis. Key to watch out in Q1 guidance given the macro uncertainty. IndusInd Bank's external audit finds a 1,979 crore reduction in the bank's net worth due to the derivative discrepancies. Sources also tell CNBC TV 18 that bank may see at least 3 senior exits due to the delay in reporting of discrepancies. Gensol receives an interim order from the SEBI against its promoter and directors, barring them from accessing the market, and has appointed a forensic auditor to probe funds misappropriation and misleading disclosures. Hello, good morning. You've tuned into Power Breakfast. I'm Vinny Motiwala, and thank you so much for tuning in to CNBC TV 18. Let's look at what's happened in the global market as well as the Asian market specifically and how they've opened up, taking the cues from the U.S. market. A muted trading session came in for the U.S. markets. Asia also has opened up a bit mixed. Most of them are trading on that red side is what we're watching out for. Hang Seng is down almost 1%. We've seen Taiwan index that is down 0.7%. Nikkei is trading in the red. Shanghai is trading with cuts of almost 0.2%. One which is trading in the green is ASX 200. That's managing to hold on to some bit of a gain. Now we have the China GDP data coming in, sales data coming in, housing data coming in. So a lot to digest for the Asian market as well. And also, the Trump tariffs, latest updates that are coming in on that front. So that is key to watch out for. Now, Indian market, what is that indicating? 2 days of strong gain that we saw coming in. As of now, Indian market is indicating a decline and a red coming in for the start for the Indian markets. Nifty implied open is down 62 points almost in today's trading session as of now. So keep an eye out on how Indian markets are going to be opening. As of now, maybe we could see a bit of a cool-off coming in from the gains that we saw in the last couple of trading sessions. But let's look at the U.S. market as of now, right? What happened at close? Wall Street that ended marginally lower in yesterday's trading session, given the tariff volatility in terms of subsidies and investors shift focus mainly to the quarterly earnings as well. Now, the CBOE WIX also is now trading around 30 against levels of 60 it hit during the announcement of reciprocal tariffs. More updates on this, on what happened on Wall Street. We have CNBC's Bertha Coombs, who's getting us a wrap on that.
U.S. markets finishing lower across the major indexes in Tuesday trading, erasing some earlier gains as tariff turmoil continues to impact investors. The Dow lower by 156 points, the S&P 500 slipping 9, while the tech-heavy Nasdaq edged down 8 points. The funding battle between the Trump administration and Harvard University is heating up. President Trump suggesting on Truth Social Tuesday that the elite university should lose its tax-exempt status and be taxed as a political entity. The jab came as the federal government froze $2.2 billion in funding for Harvard just hours after the university rejected a list of demands from the White House. Harvard's president saying the school would not, quote, surrender its independence or relinquish its constitutional rights by agreeing to the administration's terms. OpenAI is reportedly considering building its own social media network to compete with Meta's Instagram and Elon Musk's X platform. Sources familiar with the plans confirmed to CNBC that the project is in its early stages and is based on its popular image generation feature. The Verge was the first to report on the project. OpenAI has declined to comment. That's what's happening here in the U.S. Back over to you in Mumbai.
Thank you so much for that. Now let's move on. And Eric Rosengren, former Boston Fed president, discusses what kind of reimagining is happening with the global economic order and what will come from Trump's tariffs agenda. Listen in.
The trade issues are spilling over to reduce confidence in other areas. So traditionally, the United States is a safe haven. That's because it's viewed as a reliable trading partner. It has strong legal structure, stable monetary policy, and presumably sustainable fiscal policy. As those assumptions become undermined, and as globalization goes in reverse, I think a number of economic relationships are at risk of behaving differently than they have in the past. And we saw that by the rapid increase in treasuries last week. People are still trying to figure out exactly what the long run goal of the tariff policies of the United States are, because right now there hasn't been a consistent policy. We're sometimes seeing tariffs get exempted and then told it's reversed over a weekend. So it makes sense for the Federal Reserve to get a real sense of what's going on. But I would say this is a supply shock, just as your discussion on toys before. It's not just price effects, it's a supply shock because people are increasing inventory, people are trying to find alternative ways to get the same goods. All that's going to take time. Unfortunately, I think it's going to be a lot like the pandemic, that we are going to see supply shortages and price movements that seem somewhat erratic. And it's going to make it very difficult for the Fed to figure out what the underlying inflation rate's going to be.
And Goldman Sachs Vice Chairman Rob Kaplan also spoke to CNBC and strongly stated that there is no question but real signs of growth slowing down. Listen in.
I think we're seeing risks of a recession increase. I think the jury's still out as to whether we're heading into a recession. There's no question there are signs that growth is slowing, but I don't think we're in a recession yet. A lot of uncertainty as to where these tariffs are going to end up, and I think the fear is that tariffs are going to be higher than people had hoped. And once they started realizing that, you saw negative effects on the stock market, but you also saw negative effects on the dollar and particularly on the 10-year Treasury, as on the margin, there was some allocation away from the dollar and 10-year Treasury. And I think that that may have been as or more unsettling as the sell-off in the stock market. I think if you've got $36 billion of debt and growing, and we have substantial amounts of debt to sell every year, domestically and globally, I think you want a firm dollar. I don't think you want the dollar weakening. I think you want the dollar to be stable. I think you want global investors to want to be in the dollar, and you want them to some extent be willing to buy duration. And that's why the last week or two has been somewhat destabilizing. You need those things to have confidence that we can sell our Treasury debt, and we want to be able to sell beyond just 5 years. We want to sell longer duration. I think that's what this administration should want.
Now, even with the market closing with minor gains and volatility subsiding, Allianz Chief Economic Advisor Mohammad El-Erian believes that we can see more in the coming weeks as well. Listen in.
I love this calm. It's nice to have calm in the equity market, in the bond market, in the currency market. We've needed it. And let's hope it continues. But fundamentally, things have not been resolved. Fundamentally, the game of chicken between China and the US continues, and other countries are trying to figure out how to navigate this. And fundamentally, the game of chicken between the administration and the Federal Reserve continues. So welcome the calmness, but let's not get used to it, because I suspect there's volatility ahead.
That was all the global overnight action that we have, overnight action that will impact the Indian markets. But we do have a lot of other important updates that are coming in as well in terms of F&O, which are the important stocks to watch out for. So we'll set you up for trade in today's session. We have a team of research joining in with us. Sudarshan is here for that as well. Good morning, Sudarshan. But before I come to you, let me just take them through what is going to be happening in terms of the market. We do have the D Street, which actually managed to close with gains in yesterday's trading session as well. So good run up that we saw in the last couple of trading sessions. Yesterday also we had seen most of the Nifty 50 stocks closing in the green. Now Nifty closed with gains of more than 500, around 500 points. Sensex was with more than gains of 1,500 points. And mid and small cap, that saw an outperformance coming in yesterday's trading session as well. All the sectors managed to close in the green. Now today what we could see maybe, or what could impact also, one, do not forget yesterday we saw FIIs actually coming in and buying in the domestic market. So FIIs were net buyers of around 6,065 crore rupees. After 9 trading sessions of a sell, they are net buyers this time. So that'll be interesting to watch out for. And is this going to be a trend that will continue going forward? Now, Trump tariffs, a lot of updates have come in overnight on that front as well. New orders that are passed on. So that is something we'll keep an eye out on in terms of impact of that. CPI inflation data in the month of March, we've seen that easing and coming to a 3.34% on a year-on-year basis is what we've seen. So keep an eye out on that impact for the Indian markets. Q4 earnings like Wipro, Angel One are something that we're watching out for as well. Nifty implied open, a bit of a cooling off is what we're seeing, down 64 points as of now is the indication coming in for the opening for the Indian markets. But yes, that's how the trade setup is looking like. But important stocks to watch out for in today's trading session. So Darshan, which are the key ones to watch out for today? Good morning.
Good morning, Vinny. So we'll start with companies which have reported earnings after the market hours yesterday. We'll start with ICICI Lombard, which has reported a healthy set of earnings. Net earned premium has risen 20% year-on-year. Also, combined ratio has come largely in line with estimates. It was up 20 basis points and has come in at 102.5% year-on-year. Next is ICICI Prudential. It has reported a mixed set of earnings. APE, that is annualized premium equivalent, has missed estimates, while VNB margin has come in higher than estimates. It was up 120 basis points, while APE was down 3%. IREDA, it was a good Q4. AUM was up 28% year-on-year and up 11% sequentially. NIA has also risen 57% year-on-year, and on a sequential basis, it was up 22%. For IndusInd Bank, company has received report from the external agency on derivative portfolio discrepancy that company had reported a few months ago. And as per that agency, negative impact is seen as almost 2,000 crore, which is almost 2.3% of its net worth. Next is Gensol Engineering. SEBI has published interim order against the company and promoters. SEBI will be appointing forensic auditor to examine its books. Also, SEBI has barred its promoters from dealing in the securities for next few months or until the next order. Next is City Gas companies. Now, all the major city gas companies like IGL, MGL and Adani Total Gas have announced that APM gas allocation has been reduced further. It has been reduced by 18%. Now, from total allocation, which currently stands at 51%, it will be reduced to around 40%. So these are some of the major stocks that will be in focus going into trade today.
Okay, important stocks to watch out for there. But Sudarshan, could you also tell us what are we watching out for in the world of F&O? What are the important cues there?
So yesterday we saw that it was a good day of trade, and Indian market has recovered all the losses that it had seen after the Trump had announced tariff hike on April 2nd. It was a huge gain that we have seen in last few sessions. Yesterday also we saw that all the frontline indices posting healthy gains, so in the range of 2 to 3%. All the sectoral indices were in the green, while volatility index was down almost 20%. But for today, GIFT Nifty, following the global cues, is indicating a start with minor cuts. GIFT Nifty is currently down almost 60 to 65 points. Now, talking about the flows, yesterday we have seen a huge buying by FIs. They have bought more than rupees 6,000 crore, while it was a minor sell figure by DIs, which have sold nearly 2,000 crore. If you come in the derivative side, also in the index futures, FIs have bought almost 2,300 crore, and they have added long positions of more than 4,100 contracts and reduced short positions by almost 10,000 contracts. Now FI's long exposure has increased further and now it's at 28%. Coming to the option side, 23,400 call and 23,500 call have seen healthy additions, while on the put side we have seen additions majorly in 23,300 and 23,000. With this, support is now seen somewhere around 23,050 and resistance is around 23,400, which is also 100 DMA. Lastly, stocks in focus, there are 4 stocks in the band and those remain Birlasoft, Hindustan Copper, Manappuram and Nalco.
Okay, Sudarshan, thank you so much for that. Keeping an eye out on those names in the world of F&O as well. But on that note, we're going to slip into a very short break, and after the break, we'll get you the latest updates in terms of what are we expecting from Wipro in the Q4 numbers today. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now let's move on. IndusInd Bank has reported that an external audit has found a 1,979 crore rupees reduction in the bank's net worth, and this is due to derivative discrepancies. Ritu is joining in with us to give us the latest update on this one. What does it mean for IndusInd Bank as well, Ritu?
Well, first up, good morning, Vinny. IndusInd Bank has received this report from PwC, which was much awaited by the markets. The external agency it had appointed to review the impact of discrepancies in that derivatives portfolio, and the report finds a negative impact at 1,979 crores. And here the good news is this is not too far off from the street's estimates of about 2,100 crores on a pre-tax basis. In fact, slightly lower than what was feared. The bank, according to its internal review, had first pegged this adverse impact at 2.35% of its December net worth, which it has now revised to 2.27% on a post-tax basis on the back of these findings. Now, the bank also said it will appropriately reflect the resultant impact in its FY25 financial statements. Now, we've also been given to understand that the figure is quite close to the Reserve Bank of India's internal estimates initially of around that 2,000 crore ballpark range. So as far as the financial hit is concerned, there are no negative surprises, but the delay in this disclosure and how the issue was handled can have larger consequences. So we've been given to understand that at least 3 senior executives, and that includes the CEO and the deputy CEO, who is in charge of global markets, including the derivative portfolio, could be asked to step down over the course of the next few months. We know the board is already working on CEO succession after Sumant Katpalia was granted only a 1-year extension by RBI, and we understand that the regulator has asked the board to submit the list of shortlisted candidates at least 4 to 6 months before Katpalia's term is to end in March next year. In response to our story, IndusInd Bank denied receiving any such communication and also did not comment on the management changes.
Okay, Ritu, thank you so much for the latest update coming in there. Surely keeping an eye out at IndusInd Bank as well in today's trading session. But let's move on, and exclusively we have some more news flow coming in where sources revealed to CNBC TV 18 that the union government is expected to launch a legal tender for the procurement of 10,000 electric buses for 9 major cities across the country. Parikshit is bringing us more details and more updates on this one. Parikshit.
This could be a positive for electric bus manufacturers in the country. The union government is set to launch a tender for procurement of 10,000 electric buses. The Ministry of Heavy Industries is likely to launch a tender in May for the procurement of buses under the PM E-Drive scheme. CESL, or the Convergence Energy Services Limited, which comes under the Ministry of Power, is likely to issue a tender to choose intra-city buses, e-bus operators for 9 cities. The centre is likely to extend a subsidy of approximately rupees 3,000 crore for procurement of electric buses. MHI has capped the maximum subsidy amount at rupees 35 lakhs per electric bus. Most states have demanded 12-metre electric buses for intra-city use. Electric buses to be procured for Bengaluru, Chennai, Hyderabad, Pune, Mumbai, Surat, Ahmedabad, New Delhi and Kolkata. The PM e-Drive scheme had envisioned support for 14,028 electric buses with a subsidy outlay of rupees 4,391 crore. The reason why the centre is going with procurement of 10,000 crore e-buses for now is because Mumbai, Kolkata and Chennai have not yet submitted their e-bus requirements. The PM e-Drive scheme was launched by government in September 2024 with an outlay of rupees 10,900 crore and is applicable till March 2026.
Okay, Parikshit, thank you so much for that. But now let's focus and talk about earnings that are expected to be reported today. We have the IT giant Wipro that will be reporting its Q4 FY25 numbers. Rima is joining in with us of the key expectations. Rima, good morning.
Good morning. So, after TCS disappointed the street a bit, sounded a bit cautious, all eyes will be on Wipro. Now, the street is anticipating a top-line decline. So, dollar revenue is expected to decline by 0.5% on a sequential basis. In constant currency, too, revenue is likely to be down 0.2% according to the CNBC TV 18 poll. It's within the company's guidance of a -1% to +1% growth, but revenue in the March quarter on account of the macro uncertainty and seasonality is likely to decline on a quarter-on-quarter basis. EBIT margins are likely to be a little subdued, 17.1% versus 17.5%. Now, the key focus is not going to be on March quarter and what the numbers are, but the guidance, because the macro uncertainty has increased. Decisions are being delayed. Companies are postponing their investment. There is a lot of scrutiny about tech budgets. So what does the company say about Q1? Well, if they decide to guide, then the street is going to, the consensus seems to be that the company will again guide for -1% to +1%, though there is a Nomura, for instance, which expects a -1.5% to +0.5%. Also, Wipro, compared to its peers, is seen to have a higher exposure to discretionary demand because it had bought this consulting company called Capco in Europe. And consulting gets hit in times of, when there is scrutinization of, budgets. So it has a higher exposure to discretionary. So what Wipro says in particular about discretionary will be watched very closely. The stock is, along with the rest of the IT pack, has also tumbled more than 20% on a year-to-date basis. Back to you.
Okay, Rima, thank you so much for that. Surely keeping an eye out on Wipro. But on that note, we're going to slip into a very short break. And after the break, we'll get you what's happening in the world of commodities. So stay tuned in for that. Welcome back to Power Breakfast on CNBC TV 18. Now let's move on. And India's consumer price index cooled to 3.34% in March 2025, sharply lower from CNBC TV 18's estimates of 3.59%. Inflation cooled to its lowest levels in nearly 6 years, led by food price dropping to a 40-month low of 2.7%. However, core inflation held firm at 4.1% in the month of March, marginally higher than 4% in the month of February. But that's the latest update that we have on the CPI data that's come in. But what's happening in the world of commodities? We have Manisha Gupta joining in with us as always to give us the latest update. Good morning, Manisha.
Morning, and thank you for that, Vinny. Well, it's an all-time highs yet again for the gold prices. It really has been an upward journey, and we're looking at prices trading higher already in the Asian markets right now. And with this, we're up by 25% in 2025 itself. Well, there is uncertainty around the U.S. trade policy. The U.S. dollar index has continued to decline. And then there are strong inflows in gold-backed ETFs, and that really has been supportive. Not just gold, when you look at the metal prices, we've seen some support continue into here as well. What is not doing well is the crude oil prices slipped yet again in the Asian markets and trading very close to those 4-year lows that we saw the fortnight back. The profit-taking also has continued for rubber. That one has come down. Raw sugar prices should be on your screens because we've seen the lowest in 30 months onto this one as well. The sugar prices in the U.S. markets have declined by 12% in last 1 month. So while everything else is slightly tipsy-turvy, it is the gold prices continuing to hold firm.
Okay, gold prices is something that is continuing to hold firm. Thank you so much for that, Manisha. We'll surely keep an eye out in the world of commodity as well. But on that note, we'll wind down this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, our Morning Call.